All right, so have you heard about this? Warren Buffett, he's sitting on a mountain of cash,
Oh, yeah.
$325 billion,
Right.
the largest ever for Berkshire Hathaway.
It's wild, isn't
I
it?
mean, that's enough to buy, I don't know, like a small country or something.
Yeah.
It's
Oh.
making headlines everywhere, and people are wondering, like, is this a sign?
Mm-hmm.
Is even the Oracle of Omaha worried about a crash? You know?
Well, today we're going to try to unpack this. We've got some great analysis from Bravo's research. They've been following Buffett's moves.
Right, and just to give you an idea of the scale of this cash pile,
Yeah.
it represents about 30% of Berkshire Hathaway's total portfolio. That's a record high for him.
Mm-hmm.
And what's really interesting is that this isn't just some sudden thing. This isn't,
Right.
he's been building up this cash reserve, I mean, since what, like 2012?
Yeah, it's been very gradual. I mean, he did dip into it a bit in 2022,
Oh, so.
make some investments, but, he pretty quickly just resumed building it right back up.
So it's a pretty consistent pattern that's got, everybody talking.
For sure.
Okay, so let's just address the elephant in the room.
Yeah.
Is Buffett predicting a market crash? It's tempting to think that, right? I mean, this is the guy, the legend.
A lot of headlines are pushing that for sure.
Yeah.
But, it's not the first time he's held this much cash, right? Yet if you think back to the early 2000s, his cash holdings, they actually peaked in 2004,
Oh, okay.
which was well before the whole, 2008 financial crisis.
So maybe this isn't like a crystal ball doom and gloom kind of situation.
Exactly. And plus, if you listen to Buffett, he's said it many times, he doesn't try to time the market.
Yeah.
He's all about finding good businesses at the right price.
Mm-hmm.
He even said, quote, "I can't recall ever us making an acquisition or turning one down based on macro factors," end quote.
Okay, so if it's not about predicting a crash, what is this all about? I mean, is he just not finding any good deals right now?
Well, I mean, that's certainly part of it. You gotta remember, Buffett, he's really into value investing. That's his whole thing. Like Benjamin Graham,
Hmm.
the intelligent investor, that's his Bible.
Yeah.
The core idea is you gotta buy great businesses when they're undervalued. Like, that's when you buy.
Right, but are there even any undervalued businesses right now?
Well, that's the challenge. The
Yeah.
U.S. stock market has been, it's been on this tear. Valuations, they're pretty high, if you compare them historically. It's hard to find those good bargains that Buffett loves.
So is he just like sitting on the cash then?
Yeah.
Like waiting?
Well, I mean, you're right. He's not just letting it sit there doing nothing.
Yeah.
You got to think about the yield on cash right now.
Great.
It's pretty high, historically high,
Okay.
So that makes holding cash more attractive than it has been.
Okay, but how do you even compare that to stocks? I mean, stocks, they have, way more potential to grow, don't they?
Well, I mean, that's where earnings yield comes in. A concept, basically, looks at a company's earnings relative to its stock price.
Okay.
So think of it this way. You buy a share of a company, say $100,
Mm-hmm.
and it earns $5 per year. Well, its earnings yield is 5%, you see.
So what you're saying is, if the yield on cash is higher than the earnings yield on the stock,
Yeah,
then it might be smarter to just hold cash.
exactly. And, some analysts even think when that happens, when the yield on cash surpasses the average earnings yield of the whole market, it could be a sign that the market is overvalued,
Whoa, okay.
potentially signaling a peak even.
So Buffett's cash pile, maybe it's not like a prediction of a crash, but
Right.
it could be a sign that he's looking at the market thinking, oh, this is a little too high.
Could be, yeah.
Well, I feel a little smarter already.
Good. It definitely makes you think, especially when you look back, at history. Like, remember the late 1990s?
Yeah, the dot-com bubble.
Yeah. The market, it was soaring, valuations crazy high, and yet cash yields, those were pretty attractive too.
I'm sensing a pattern here.
Exactly.
Yeah.
And what happened, I mean, after all that excitement, you had the 2001 recession, and then basically a decade of like, kind of weak returns for the U.S. stock market.
Right.
So I'm not saying it's going to happen exactly the same way again, but
Yeah.
it's a good reminder that markets can kind of get ahead of themselves sometimes. A little caution, never hurts.
Okay, so Buffett's being cautious,
Mm-hmm.
maybe a little skeptical of how high things are right now.
Yeah.
But most of us, we don't have billions of dollars just lying around.
Haha, right.
So what can we take away from this as like everyday investors?
That's the big question, isn't it? And I think it all comes down to value, really understanding value. It's not about just buying what's hot, what everyone's talking about, what's going up. It's about like figuring out what something is really worth.
But how do we even do that? I mean, isn't that super complicated? Like valuing a company.
It can be, but there's some basic things you can look at.
Okay.
Like their earnings, their cash flow, are those growing consistently? And then what about their debt? Are they drowning in it or is it manageable?
So it's like kind of a detective game looking for clues.
Yeah. And remember, even if you don't have the time or you're not an expert in this stuff, there's help out there. You know,
Okay.
there's analyst reports, websites, even newsletters that can give you some good insights.
So instead of just like blindly buying the hot stocks,
Yeah.
we should be asking ourselves, okay, is this company really worth what they're saying it's worth?
Exactly. And that's what I think is so great about Buffett's approach. He's not afraid to be patient, to just sit on the sidelines if he doesn't see anything good.
Right.
He's not trying to time the market, but he is super disciplined about like sticking to his value investing thing.
Yeah, that makes sense. You mentioned earlier Bravo's research.
Oh, yeah.
They have a different approach, right? They're kind of more in it for the short term.
Yeah, they're all about like current market trends, catching momentum.
And always looking at the data, adjusting their portfolio based on what they see happening.
So it's like they're surfing the waves of the market, trying to ride the upward trends.
Uh-huh. Exactly. And they've been pretty successful with it, too. I mean, they've been riding this bull market for a while now, but
Yeah.
they're also, realistic. Things can change fast.
So there's like two different ways to go about it. Buffett's long-term, value-focused thing, and then Bravo's research, they're more like agile, following the trends.
Yeah, and it's interesting, isn't it, how they can both be successful with totally different methods.
Totally. I guess it shows that you got to find what works for you as an investor.
Absolutely. You got to know yourself,
Yeah.
your goals, how much risk you can handle. There's no one right way to do it.
Right. You got to pick a strategy that you're comfortable with and then like stick with it.
Yeah, for the long haul.
So whether you're Buffett, the patient value guy, or you're more like Bravo's research, just, agile and following the trends, the important thing is what? To be informed, disciplined, and consistent. That's key.
Great advice.
Yeah.
So let's bring it back to this giant pile of cash that Buffett's sitting on.
Uh-huh.
I
Yeah.
mean, we know it's not like a crash prediction, but it does seem like it's telling us that maybe the market is a little overvalued.
It's possible, yeah.
So what are we supposed to do? Us regular folks, I mean, what should we be doing with cash in our own portfolios?
That's the million-dollar question.
Right.
And I think, it really depends, doesn't it? Like your own situation.
Yeah.
If you're young, you've got a lot of time ahead of you, maybe you go for a more aggressive portfolio, lots of stocks. But if you're close to retirement, maybe you want to be a bit more conservative, more cash, fixed income, that kind of thing.
So we're not all supposed to just like sell everything and hoard cash.
Uh-huh. No, no.
It's about knowing how much risk you're comfortable with
Yeah,
and then like adjusting what you own based on that.
exactly. And even within your stocks, you can still use Buffett's principles,
Yeah.
Look for companies with strong fundamentals, solid earnings growth, and reasonable valuations, that kind of thing.
So even if we don't have like billions and billions, we can still learn from how Buffett does things.
For sure.
Be patient, be selective, and don't be afraid to hold cash when it makes sense.
Exactly. And knowledge is power. The more you know about investing, the better decisions you're going to make. Decisions that, actually work for you and your goals.
This has been, really interesting,
Yeah.
I think what's crazy to me is how Buffett's cash pile is like, I don't know, almost like a warning sign.
Yeah.
Not like, the market's going to crash tomorrow, but
Right.
definitely something to pay attention to.
It's like he's saying, hey, be prepared.
Right.
He's not just sitting there doing nothing with it. He's like strategically waiting.
Yeah, exactly. He's got options.
Options.
Like if he finds some undervalued company or, I don't know, maybe he wants to buy another company or buy back his own stock, he can do it.
He's ready to pounce.
Yeah, and that's the thing about cash, right?
So flexibility.
Yeah, it gives you the flexibility to do stuff when other people are freaking out and having to sell.
Exactly.
Like having, I don't know, like an emergency fund,
Yeah, for a rainy day.
but like a giant one.
Uh-huh. Yeah.
So thinking back to those guys, Bravo's research,
Yeah.
they're more about the short term, right? But there's still something they have in common with Buffett.
Definitely.
They both are really focused on understanding what's happening in the market.
Totally. Whether you're in it for the long haul, like Buffett, or you're trying to catch the waves, like Bravo's research.
Right.
Gotta know what's going on.
You got to be able to like see which way the wind's blowing.
Yeah, adjust your sail.
And that means what? Staying informed,
Yeah.
doing your own research.
Don't just blindly follow everyone else.
Exactly.
Eh.
So much noise out there, it's easy to get caught up in it.
Mm.
But it's your money.
the end of the
You
day.
got to be comfortable with what you're doing. So as we wrap up, is there like one big takeaway, one thing you want our listeners to remember from all this?
I'd say investing, it's not a, one size fits all kind of thing. There's
Yeah.
no like magic formula, but you can educate yourself,
Hmm.
develop a strategy that works for you and how much risk you can handle
Right.
and be prepared to adapt. Things
You
change.
like Buffett, build yourself a cash fortress.
Aha, exactly.
Well, thank you so much to Bravo's Research for their analysis, and thank you to you, our listener, for joining us. We'll see you next time.